All right, we are good to go. It is Monday, December 12th at 7:30. This is the City of Brainerd, Minnesota City Council meeting, often referred to as the Truth and Taxation hearing, and I call the meeting to order. Administrator Bergman, please call the roll.
Johnson. Here. Beezer. Stengline.
Here.
Erickson.
Here.
O'Day. Stunek.
Here.
Bevins.
Here.
And Bedell.
Here. Before we move on to item 3, which is why we're all here, the budget and levy presentation, I want to just take a moment. This weekend, Frank Ball, former police chief for the city of Brainerd, and the ultimate public servant, passed away. He was a great citizen and a great employee of the city of Brainerd, as well as the city of Pequot Lakes, Crow Wing County, state of Minnesota, and I'm sure there's more. But in honor of Frank, take a moment and remember all the great things he did. He was a great employee and a great friend. So Frank, we will miss you. We will move on to item 3, the 2023 budget and levy presentation. I'll turn it over to Connie Hillman for the 3-minute presentation.
Thank you, Council President and members of the council. So the purpose of tonight's meeting is to discuss the Brainerd's 2023 budget and levy and allow for public input. This is not the meeting to discuss the valuation that's placed on properties. That meeting is held in May. But questions regarding property valuation and classification can be directed to the Land Services Department at the county, and their phone number is 218-824-1010. So the Minnesota property tax system is very complex. This is a simplified version of it. Everything starts with the estimated market value. In Crow Wing County, that is determined by the assessor's office. Then a statutory formula is applied based on how the property is classified: commercial, residential, homestead, agriculture, etc. This arrives at the total tax capacity for the city. This is the sum of all the parcels in Brainerd, of the city. We have the city's levy, which is also known as the city's income or revenue, divided by the total tax capacity of the city equals the city's tax rate. That tax rate is then applied to each individual parcel, which equals the property owner's tax bill. Taxing jurisdictions such as cities, counties, and school district set the levy in dollars. The taxing jurisdictions do not set the tax rate. Your property value determines your proportionate share of the dollars that goes to each jurisdiction, and the tax rate is the result of the levy dollars needed and the total tax capacity of the jurisdiction. So let's look at the estimated market value of the city of Brainerd. How is this value determined? The estimated market value of your property on January 2nd, 2022 is what is used to calculate the amount you pay in property taxes for 2023. This is determined by a sales ratio study that analyzing sales that occur from October 2020 through September 2021. This is what determines the value of your property on January 2nd, 2022, known as the assessment date. Then in March, you get your valuation notices. In May, they have Board of Equalization and Appeal. This is where you can contest the value that's put on your properties. Then in November, you receive the proposed tax statement. In December, we have the tax levy hearings, which is why we're here tonight. In March of 2023, you will receive your actual property tax statement, and then the first half is due May 15th, and the second half, October 15th. So if we look at the overall estimated market value for the city of Brainerd, increased 22.3% over pay year 2022. This is a significant increase. The biggest dollar increase is in the residential properties, which is a 24% increase, or 89% of the total dollar increase. This chart shows the history of the estimated market values for the city of Brainerd. This shows that a 22.3% increase is significant and something that we have not seen in the last 10 years. So now if we look at the tax capacity, taking the estimated market value and applying the statutory formula based on classification equates to an estimated tax capacity of $11,108,035 for the city of Brainerd for pay year 2023. This is over a $2.2 million increase in tax capacity. On average, the tax capacity for the city has been about 1.1% of the estimated market values. This graph is the estimated tax capacity by classification. Over the last years, we can see a shift in the tax burden from commercial and industrial properties to other properties to residential, with residential being 62% of the total tax capacity. So what does an increase in the tax capacity of the city mean? Well, if we have the city levy and there's no change to this levy, we have an increase in the tax capacity that generally means a decrease in the city's tax rate. So now that we have looked at the estimated market value and the tax capacity of the city, the next thing we need to look at is the city's levy. The city determines its levy through the budgeting process. We estimate all of our expenditures, personnel costs, supplies, services, debt, and capital, anything that's going to be supported by the tax levy. We estimate all of the non-property tax revenues, such as fines, forfeitures, state aid, local government aid, and the difference between the two is the levy needed. Budgeting is basically planning and prioritizing goals for the coming year based on experiences in the past year. So if we look at our operating expenditures and we start with personnel services, we see an increase of just under $300,000 over the 2022 adopted budget. There are no new full-time budgeted positions, but we are assuming that the two open positions for the assistant planner and engineering tech will be filled in 2022. We're assuming that all new employees will elect the $300 family plan option for health insurance. Temporary employees have been reduced from 2022 for the election staff and a temporary employee for ITGIS, going from 2 to 1. And budgeting for 25.5 sworn police officers, but planning on getting to 27 during the year. The current staffing level is at 25. So the increase is due to employees moving through the grid pay system based on contracts that have been settled or an estimated amount for contracts that are not settled yet. If we look at supplies, we see an increase of about $93,300. This is an increase in the repairs and maintenance costs and motor fuels. When we look at services, we see a $236,332 increase over the 2022 budget. This assumes that the city will continue to lease vehicles and includes services for a wage study comp that we've been saving for in the capital fund. This will be reflected in the transfers in line item, and includes funds for codification and an increase in contracts for the misdemeanor prosecutor, animal control, and audit services. We also have an increase in computer supports for BCA audit mandates, body-worn camera support, and scheduling software for the police department. The city also needs to take into consideration capital needs. The capital levy is for all city-owned facilities, to fund equipment needs for all departments other than the fire department. The fire department needs are funded through the transfers out and are part of the amount charged to the entities that contract with the city for fire protection. The total capital purchases for 2023 total $683,100, excluding the equipment for the enterprise funds. So this is a summary of the capital items to be purchased that are currently budgeted for 2023. The amount of the 2023 capital expenditures may change depending on the approval of the Parks Department budget. The $683,100 has nothing from the Memorial Park lights in it. They are not included in tonight's presentation based on council's consensus at the last budget workshop. The city is planning on using $300,000 of ARPA funds for the 2023 capital purchases as well. The city is also planning on transferring just under $180,000 to reduce the 2023 levy from the capital fund to the general fund. You may have noticed that the levy for the capital equipment and facilities is $1,255,927, yet we're planning on spending only $863,075 in 2023. A goal of the City Council is not to have to issue debt for equipment and facilities. The next slide will show a portion of the 30-year capital plan. Here we are assuming that the capital levy stays the same for the next 5 years. We have the $863,075 of proposed cash expenditures for 2023 as shown on the previous slide, and this includes the transfer of just under $180,000 to lower the 2023 levy. And we have the planned expenditures over the next 4 years that we know of today. The bottom line shows that we do not have to issue debt for capital and facilities at this time. However, there's not an inflation factor built into the plan for future capital expenditures either. The city also needs to levy for debt services. The city needs to levy what is needed to make the August 2023 and February 2024 payments. We see an increase in the amount needed for the debt levy of $119,385. The city is budgeting to issue debt for the city's portion of the 2023 construction projects and have included an amount in the debt levy to structure the debt issue. The city also has to pay $1.9 million as its portion of the lawsuit settlement. The city is planning on using other sources, fund balance, proceeds from the sale of the industrial park property, and transfers from the other funds, and borrowing $1,250,000 from the Brainerd Public Utilities and the League of Minnesota Cities Insurance Trust Fund. Therefore, we see an increase in the amount needed for debt in 2023. The city also has other levies that are set by charter or that the city has to fund. This is the first year that the levies for permanent improvements that we use for roads and the senior center, green space, and community festivals are based on a percentage of the 2022 total levy rather than a mill rate. The library has requested a 2% increase, and the EDA's levy is the maximum allowed by state statute, and there was no change in the levy for the airport. So when we total all of the estimated expenditures that are to be supported by the levy, the total 2023 budgeted expenditures total $15,145,596. This is an increase of $672,413 from the 2022 levy, or a 4.65% increase. So now that we have the total budgeted expenditures, we need to look at the non-property tax revenues. Total budgeted non-property tax revenues total $8,717,096, which is an estimated increase of $514,739 compared to the 2022 budget. The city is budgeting an increase in grants and aids, the biggest portion coming from the 2023 certified local government aid, which is almost $80,500 increase from 2022, as well as an increase in the amount of fire and police aid the city anticipates to receive based on funding received in prior years. The city is also budgeting a significant increase in other revenues. This is due to the estimated increase in contributions from BPU sales, with both crypto companies being up and running in 2023, and also recognizing the sale of leased assets in the operating fund versus the capital equipment fund. The significant increase in the transfers in is the transfer from the wage study that the city has been planning on in the capital fund, but will be paid out of the general fund, as well as almost $180,000 from the capital fund to lower the 2023 levy. Another item to consider in setting the levy is any use or addition to the city's fund balance. 2023 is a non-election year. The city budgets $15,000 a year. The elections are held every other year. Therefore, in 2023, the city will increase fund balance by $15,000 to be used in 2024, the election year. So the difference between budgeted expenditures and non-property tax revenue equals the levy needed for 2023. This amount is $6,443,500 and is a 3% increase over the 2022 levy. The preliminary levy was adopted in September at $6,854,566. This is a 9.5% increase over the 2022 levy. The 2022 preliminary levy was used to compute the proposed property tax statements property owners just received. The city's final levy, which is set in December, can be lower but not higher than the preliminary levy. The preliminary levy was set at this amount as the city needed 5.54% to cover expenditures and was $250,000 or additional $2,000 short in paying its share of the lawsuit, which is $1.9 million. Since September, the council has transferred funds from debt service funds where bonds have been paid off to the general fund to pay for the lawsuit. The city council has also dedicated proceeds from the sale of the industrial lots to also pay for the lawsuit. Therefore, the final levy could be set at 5.88% increase to cover budgeted expenditures. At a November workshop, options to reduce the levy even more were discussed. Council provided direction to staff to prepare for tonight's public hearing with a final levy with a 3% increase. This was achieved by doing the one-time transfer of approximately $180,000 from the capital fund to the general fund. The above table shows the preliminary levies, or the final, or the proposed in the case of 2023. The city would have liked to avoid the peaks and valleys in the levy. This table also shows that for 7 of the last 14 years, the council has reduced the final levy set in December from the preliminary levy set in September. We have reduced the final levy, which is set in December, from the preliminary levy, which was set in September. The city has over 80 different funds, but it does not officially adopt a budget for all the funds. This graph shows the funding sources of all the governmental funds that the city does adopt a budget for. The city has 2 enterprise funds that it officially adopts a budget for, and the information is excluded from this graph. And that is because the, that is because it's a difference in accounting of enterprise funds versus governmental funds. So we have the amount that the city levies, and then the next biggest portion of funding comes from intergovernmental revenue, with the biggest portion being from the state in the form of local government aid. The certified amount for 2023 is $4,695,588, and is almost $80,500 more than what was received by the city in 2022. We have revenue from charges for services and fines. The city receives a contribution from Brainerd Public Utilities, and we have other taxes, licenses, and permits, and miscellaneous revenues such as interest and special assessments. It is important to note that 62.1% of budgeted revenues come from sources other than property taxes. The general public safety, parks, and street and sewer funds are what we consider the working funds, and the activities from these funds are supported by the levy. We also have a levy for transit, our capital, our debt service, road maintenance, which is our permanent improvement levy, and other, which includes the programs in the charter, the library, EDA, recycling fund, and city-owned parking lots. Now let's take a look at the city's tax rate. With a levy of $6,444,500, or a 3% increase, the city's estimated tax rate is calculated to be 58.534%. This rate is an estimated decrease of 12.375% from the 2022 tax rate of 70.911. Keep in mind that the preliminary levy was set at a 9.54% increase, and the estimated tax rate was 62.237%. This is what was used for the proposed tax statements property owners just received. And the city council does not set the tax rate. The tax rate is a result of the levy amount set by council and the total tax capacity of the city. Now let's look at the impact by applying the city's tax rate to the tax capacity of the property to determine the property owner's tax bill for 2023. Assuming that a residential property had an estimated market value of $140,000 in 2022, this would have been a tax capacity of $1,154. And this was determined by taking the estimated market value of $140,000, applying the homestead exclusion and the statutory percentage. Then we apply the city's tax rate of 70.911% to the tax capacity, and the homeowner would have paid $818 in city taxes in 2022. The table shows the changes to the city's tax liability for 2023, assuming that there was no change in the value of property. With a 3% increase in the levy, the homeowner would expect to see a decrease in the amount due to city taxes of about $143 a year. However, this is not what property owners are seeing because their estimated market values did increase, and the tax levy used for the proposed tax statement had a levy increase of 9.54%, which is now currently at 3%. With the proposed property tax statement, a residential homestead owner who paid $818 in city tax liability in 2022, but had an average 22% increase in their estimated market value, is seeing $109 a year increase in their city tax liability. With a 3% increase in the levy, the same owner who had the 22% increase in the estimated market value will actually see an increase of $53 a year increase in the city's tax liability. To compute the updated city tax liability, you need to take the city tax liability from the proposed property tax statement and subtract 5.95%. In this scenario, if the homeowner had a 16% or more increase in their estimated market value, they would see their city tax liability for pay year 2023 increase. Even with a 0% increase in the city's levy, with a 22% increase in the estimated market value, this property owner would have saw an increase in the city's tax liability of about $28 a year. If we take a look at the total tax impact for a residential homestead property owner using a 22% increase in the estimated market value, the liability for 2022 would have been $1,665. The proposed 2023 tax liability would be $1,703, or a 2.25% increase. The proposed property tax statement for 2023 would have showed an increase of 5.56% in the total tax liability. There are generally two reasons why your tax bill changes. One, there's a change in the tax rate, which is a result of the levy dollars set by the taxing jurisdiction and the total tax capacity of the jurisdiction, or there's a change in the estimated market value. For 2023, the total tax rates went down. The change in the tax rate would lower this homeowner's taxes by $340, or 20.42%. However, due to the increase in the estimated market value, the homeowner's tax liability increased by just under $378, or 22.68%, for a net increase of $37 or 2.25%. For this homeowner, the increase per taxing jurisdiction is listed with the city's share of being $54 a year increase. In 2023, for every dollar a residential property owner pays in taxes, 21 cents goes to Crow Wing County, 1 cent goes to Region 5 in the HRA, 26 cents goes to the school district, and 52 cents to the city. Now, if we look at the impact for a commercial property owner, assuming that a commercial property owner had an estimated market value of $363,500 in 2022, the property owner's tax capacity in 2022 would have been $6,520, and that is determined by taking the estimated market value and applying the statutory formula for commercial properties. Then applying the city's tax rate of 70.911% to the tax capacity, the commercial property owner would have paid $4,623 in city taxes in 2022. Now, assuming that there was no change in the value of the property, the table shows the estimated change to the city's tax liability on various changes to the city's levy. With a 3% increase in the levy, the commercial property owner would expect to see a decrease in the city tax liability of $807 a year. This again assuming that there is no change in the value of the property. And we know that this assumption is not likely and is not what property owners saw on their proposed property tax statements. With the proposed property tax statement, a commercial property owner who had paid $4,623 in city tax liability in 2022, but had the average 22% increase in the estimated market value, is seeing a $430 a year increase in the city property tax liability. With a 3% increase in the levy, the same commercial property owner that has the 22% increase in estimated market value will actually see an estimated $129 a year increase in the city tax liability. Again, to update the city tax liability for 2023, you can take the city's tax liability from the preliminary tax statement and subtract 5.95%. For this commercial property owner, it was calculated that if they had around a 19% or more increase in their estimated market value, the city tax liability for pay year 2023 will increase. Even with the 0% increase to the city's levy, with a 22% increase in the estimated market value, this property owner would have saw a decrease of about $9 a year in the city tax liability for 2023. If we take a look at the total tax capacity for a commercial property owner using a 22% increase in the estimated market value, total tax liability for 2022 would have been $10,768. The proposed 2023 tax liability would be $10,884, a 1.08% increase. Again, the proposed property tax statement would have shown a 3.9% increase in total tax liability. The reason, again, for the change in liability is due to a change in the tax rate or into the change in the estimated market value. The tax rates for 2023 went down. The change in tax rate would have lowered this property owner's taxes by $2,173 or 20.81%. However, due to the increase in the estimated market value, the property tax liability increased by $2,289 or 21.25% for the net increase of $116 or 1.08%. The property, for this property owner, the increase per taxing jurisdiction is listed below, with the city share of the increase being $129 a year. In 2023, for every dollar a commercial property owner pays in taxes, 19 cents goes to the general fund, 18 cents to Crow Wing County, 1 cent to Region 5 and HRA, 19 cents to the school district, and 43 cents to the city. The final budget and levy will be adopted at the December 19th, 2022 council meeting, and the levy must be certified to the county auditor by December 28th, 2022.
Second.
Thank you. We'll now open the public comment portion of this meeting at 7:55 and ask if there's anybody online, John? Last 3 times. Is there a second call for public comment on the tax and budget presentation? And we'll ask a third and final time. There's nobody in the audience, nobody online. So we will close the public comment at 7:56. Ask if anybody in the council has a question of Connie. If not, yeah. If not, we're gonna vote on this on the 19th. Right, correct?
Correct.
And we'll ask for a motion. to
So
adjourn.
moved. Second.
Motion by Stunek, second by Johnson. All in favor, say aye.
Aye.